Hey traders, Shane from Global Market Trader. Welcome to our V2 deep pullback buy setup, entry and stop walkthrough. So this is our training video for the V2 deep pullback buy. So let's quickly jump in and have a look at what our conditions are for the buy setup. So first up, we need to see price in a buy trend or a long trend, and that's confirmed by our cyan candles or price bars, depending on which way you want to look at your charts. You might have them set as candles or price bars, and I'm going to show an example of both. Now, the pullback has to have price close below the trend line to confirm that we're looking for a deep pullback. So in order for us to get a potential setup, a buy setup, we need price to close below our trend line once we're in a buy trend. So I'm going to walk you through now an example of that. So let's go straight to our charts and have a look at a potential buy setup deep pullback. So you can see from my chart here, I've got crude oil up on an 89 tick, and you can see that our cyan candles have started to print, showing us that we're in a buy trend. So you can see price is pushing up nicely here. We're making higher highs, and we're making higher lows as well. And then we get to this point here where we start to get a little bit of selling pressure. So what we're looking for a potential pullback is we're looking for obviously the sellers to temporarily take control, and we're looking for price to close below this trend line. So on our chart you'll see that we've got our cyan candles that reflect our trend. We've got our trailing stop here, which is our dotted line. That green dotted line is our trailing stop for our trend system or strategy, and we have our dashed line here, which is green at the moment, which is showing that we've got a buy trend. So there's a definite bias to the buy side. So for us to confirm a pullback, a deep pullback setup, we need to see price close below this line, and you can see it does here on this candle here. Now, and that's at 21.41. So let's have a look at how that looks on price bars. So we'll go to format symbol, we'll move over to price bars, and we'll go OK. And you can see that we've got a clear close below that trend line. That's exactly what we want. So that basically puts us on alert that we've got a potential trade setting up. Now that we're not going to take the trade off this candle here, but we're certainly going to look for a trade. Now, a couple of things come into play here, because once we've got our alert that we've got a potential trade coming, then we need to look for a close back above. So we need to look for a close back above the trend line. So that would be option one for a buy. So some of you may choose to take the trade once the candle closes back above the trend line. So you can see here I've marked that with our up arrow. So we'll just add a little bit more weight to that arrow so we can see it a little bit better. And that shows us that there's a potential buy set up there. So once it closes back above, you can take the trade on entry of it closing back above, or you could take it on a breakout of the high of that candle, either or. So that's option one for the buy setup. So closing back above the trend line. Now you'll see down the bottom here that we've actually got what we call the GMT V2 volume spike divergence. So what that is telling us, this is basically a filter, and it's telling us that as the sellers took control of this market and drove it back down below the trend line, it was measuring how much momentum and strength was in this short-term move. We didn't know it was a short-term move, but let's assume that we're tracking this in real time. So what we want to do is get an idea of how strong this counter trend play is from the sellers, because our goal, if we're just trading the pullback strategy, the deep pullback, is to potentially come in and take a trade. Now, if this is our criteria that we need to see price close above the trend line, then we're looking for this confirmation, which we don't actually get till about here. So if you're waiting for confirmation that the sellers are losing their momentum and we're getting divergence in, because this is showing you selling volume divergence. So what that means is that the sellers who have control at this point here, their momentum to the short side is running out. They're losing their volume on the push down. They're losing their momentum. So what we would potentially be looking to do is take a trade off this, or using this filter as a confirmation tool to get into the trade. Now, some of you might decide you want to do that. Others may decide that, well, look, I'm just going to take the trade regardless. It's a pullback trade. They're low risk trades, so I'm happy to take those based on my testing. But other traders may find that the actual trade needs to be confirmed based on the presence of divergence. So let's just continue with our setup. So option 1 is to buy on a close back above that trend line, and option 2 is to buy on a second candle close. So there's your first candle close, there's your second candle close. So we'll just widen this out a little bit here so we can see this a little bit clearer, and we'll pull that back. So there's our second candle close there, and that would have you in the trade. So our target on the trade is going to be, once we get into the trade, our target will be based on, so traders, you can have a fixed target on your trade. Whatever your initial risk is, say it's 10 points, you might have a fixed 20-point target or 15-point target. We always want to be going for a 1.5 or 2 to 1 on our trade. So we're risking, say, $100. We want to be going for at least 150 to 200 on our trade. So for this example here, let's assume we get in here at 99. We'll say we get in at 112. So our risk is going to be determined by the swing low. So there's our swing low at 86. So we've got 14 points of risk there. Now, if we've got 14 points of risk, we may want to be going for, say, a 30-point target. So that would be a 2 to 1, or a 28-point target would be a 2 to 1. Now, on the trade setup, our stop would always be 1 or 2 points below the previous swing low. So that is the previous swing low here, down here at 86. So that's our swing low. So that would be our stop placement, and our stop would be 1 to 2 points below that. You can work it a little bit more, but that obviously depends on what you're comfortable with as your level of risk. So there's our initial stop, and we'll just mark that in red. So initial stop stays here, and once we're in the trade, we're going for a fixed target. And the other thing we want to keep an eye on is just where that previous high is. So there's our previous swing high. So your target might be 25. So that wouldn't quite be your 2 to 1 on reward to risk, but it's at least covering 1.5 to 1. So on a break at 112, and our trade, so we'd be taking 25 points. We may even work the trade a little bit lower than that, just so we're not trying to break the high. Others may be working at substantially higher to get the full 2 to 1. So that's the setup on the deep pullback. So let's go through that again. We need price to close below the trend line. Our entry price on this trade, and we'll mark this on our chart. Alright traders, let's walk through this trade again. So we close below our trend line, then our first candle closes back above. That's one option. That's option 1 on the buy-in. Option 2 is that we take our second candle close above, just to confirm that we're getting some solid momentum back in the direction of our original trend. So initial stop is the swing low, which currently was at 86, so we work at 2 points below that at 84. Our target on the trade would be the previous swing high, maybe -1, or you can go for the previous swing high, which is our target at 112.25. Some of you may be using a trailing stop as your target, so you want these trades to run. But in my experience in testing, the fixed targets with a 1.5 to 2 reward to risk seem to work much better. and you can see the end of the trend targets are painted in those solid green dots that appear just above the trend line there. Now, one thing that I wanted to clarify was that if you are manually trading the pullback system, you can utilize this support line that prints up just to confirm the pullback here. You'll see the dots here. You can use that as a potential entry point because you'll see a lot of the time that the market does trade through this area. So if you use that as your entry point, that's an aggressive buy entry because you haven't got confirmation closing back above the trend line, but what you'll effectively get is you'll get a much smaller risk on your trade, so you might even be able to get away with a 5-point stop on your trades, working it below the previous swing low, and that's a great way to capitalize on a fantastic reward to risk. But again, it's a little bit more aggressive, but it definitely does have lower risk on the trade, so that's something to consider if you're manually trading. So just using your entry as a touch, and you can see here on this example that the trade wouldn't have actually touched that area. So if you are going to manually trade and use that as your entry point for the deep pullbacks, you won't get as many trade setups, but they will be far greater on their reward to risk than the standard trade setup. So just a little bit of a recap there. So you can see that trade would have taken 25 points out of the market, $250 on a pullback. So that was a nice setup, and that was our buy pullback. So thank you for your time, everybody. If you have any questions, feel free to send us an email, info@globalmarkettrader.com. Otherwise, we look forward to taking you through some more walkthrough videos on our buy deep pullback setups.